What is going on, everybody? It's your boy, Mr. Banks, coming at you live with another trade recap. And today I'm going to be going over averaging down. Don't do a lot of averaging down on trades, but I did one today and I wanted to show you why. And hopefully it helps you in the future. If you ever decide to average down on any trades, I'm going to tell you when to do it and why to do it. But go ahead and hit that like and subscribe button so you don't miss any of this educational content I put out on a daily basis to make you a profitable trader. Now, we took Google today. Let me go ahead and share my screen with you guys. We took Google today at open, right? Had a lot of momentum. So let me come back to the beginning. What do we look for when we're starting off the day or coming into the day creating a trade plan? Well, it's always going to be a top-down analysis. Now, what do I mean by that? I'm always going to be looking at the higher time frames and coming down to the lower time frames to actually take my entry and my trade. So we're looking at Google today. Looking at the daily had a nice little flag out. On the 4-hour, though, you can see this nice little bull flag pretty well, right? Pretty clear here on this Google bull flag on the 4-hour. So another thing to keep in mind is on the higher time frames, if we see a certain pattern or we see a certain level, right, those are always going to hold more weight than the lower time frames. Lower time frames are great for intraday moves. Higher time frames will show you the bigger picture. It'll show you the more important levels. And if there's a pattern on a higher time frame, it's also going to hold more weight. So we can see this massive bull flag here on Google coming into today. Great. So I have a bullish thesis on this. I'm looking to the upside. I'm looking for these lows to hold around 146 to hold for a move up on this Google bull flag. So now we can come back in to the smaller time frames. We can see on the 1-hour, right? We're kind of just basing out. Here's that bull flag. We're pushing up. Sometimes it takes a couple days for this to actually play out. You can see on the daily, right? Flag out, push up. Coming into today, go down to the 5-minute. I like to trade on the 5-minute a lot as well as the 2-minute sometimes. So we already know that one of our big levels to break is this 148.50, right? We broke below it to go create this low, this flag. Yesterday, we came up and we rejected it. Today, we did the same thing, but we finally broke out. So moving into the intraday analysis, we took the trade in the morning, right? It had momentum. Should have known it was FOMC, so we should have known that it was going to be a little bit of a back and forth type of move in FOMC, kind of sideways action, kind of a lot of fake breakouts, fake breakdowns, but we had the momentum there. I thought we were going to get a little bit more into that 149.50. We took the trade on this momentum at open, ended up going red. That's fine. One thing to keep in mind is you always need to be okay with losses or red on trades, right? It's going to happen. It's going to be okay. We can still see here on the bigger time frame, right? The bull flag. We have time on our contracts. We bought Friday's contracts. We have time. We had that momentum. So we showed that we had buyers step up in a demand where we needed them to step up again today. So why did I average down? Well, looking at the higher time frame, looking at the bigger picture, not stressing over it, going to average down. Why? Because I want to see this bull flag play out. One, we had time on our contracts. Two, we're still holding major levels. So when we came back down, I averaged down on the trade. Let me come back down to the 5-minute for you guys. We came back down, averaged down on the trade. We were still holding pre-market low. We were still holding well above our 146 level. Had a nice little slow melt up during the day and then the sell-off. What is this? Nice little liquidity grab near these lows, right? Below pre-market low, you can see that this is where most retail probably had all of their stops in place to sell out of this trade. They grabbed it. FOMC was today, and the market absolutely pumped to the upside. We ended up getting 13% on the average down. I ended up getting a little bit over 30%. I did average down again on this drop before the team, right? We grabbed 30%, 13% for the team. but you guys can see when to average down is when you have a trade plan in place. And second, when you have time on your contracts. If it's equity, obviously you have all the time in the world for it to play out. Contracts, right? As long as you have some time on that contract. I mean, we had 149 calls, very, very close. We're about 2 points out the money. Wasn't that big of a deal. We had until Friday for these contracts to play out. We have a massive bull flag, not only on the daily, but on the 4 hour, right? So there's no stress when you have time. You know what the trade plan is. You know what that macro trend is, which is bullish, right? A very, very bullish, massive bull flag here showing on the daily, the 4 hour. It is okay to average down on trades. And that is when I actually average down on trades. When I have a trade plan, when I know I have time, uh, when we still hold major levels, that is another big thing. When we still hold major levels, like 146, right, would be this low here would invalidate that bull flag. We still hold the major levels. All of those put together, you can average down on a trade. Now, in saying this, don't go blowing your whole account trying to keep averaging down, averaging down, averaging down. Still keep with good risk management. Wait also till you get a nice pullback into a big level. So like today when we got the pullback, average down when we got into this pre-market low. Average down again right here, but we averaged down when we got into the pre-market low with the team. So coming down into levels as well, waiting for that to come down to a level to average in, right? Not just on, oh, it's red right here, I'm going to average down right away. Because you can get a bigger drop. You can get a nicer, another entry on the trade and get a even bigger average down on the trade, which in return would help the trade work out even better in your favor, right? If you buy the trade up here, we were in at 130 and you're averaging down at 120, you're not going to get a big average down, especially if you get a big push down. The average isn't going to come down too much to really help you out, right? You want it to help you out. So when we do average down, we come down to certain levels, and that is when you're going to average down as well. Now you can see this trade absolutely paying off, paid off at the end of the day. But if we hold this trade is going to pay off very, very nicely coming into tomorrow. And that is when you average down. That is why I average down. I hope this video helped you guys a little bit. Just to go over real quick, levels, average down when you get down to certain levels. 2, when you have a trade plan. And 3, when you have time on your contracts. And when you have a trade plan, know that there is going to be a macro trend, right? We're not going to have a trade plan basing off of the 5-minute time frame, trying to put in a swing off of the intraday levels, right? I had a trade plan from this bull flag on the macro trend on the daily, the 4 hour, right? The larger time frames. So if you guys have any questions, drop them in the chat. We'd love to hear them. Drop them in the comments. Please like and share this video. I'll see you guys next time. Be patient. You guys are going to make it. It's all going to work out. I believe in you. And I'll see you guys next time on the live trade recap. Love you guys.